Again, hi everybody, let's get started. For those of you that are here today, and for those of you who couldn't make it, you'll be seeing this on a recording. This is going to be a very educational event. This time I kind of got carried away today. I did this all this afternoon. Yes, being recorded, Tony. I actually went through and I copied charts, put them on the slides, because it's very difficult probably to follow along if I'm just kind of going through a live chart day by day what's going on. So I actually took and I made slides so this is organized as it can possibly be so we can have a good learning experience. Okay, so this is called the DTS Market Letter Review Day. It was originally designed for people who subscribe to the letter to get together and review exactly how the letter works, how it's supposed to work, to see if you have any questions, etc. And I decided, as long as I'm doing this, why not invite everybody? If you want to come and listen in. It'll be a great educational experience, and feel free to ask any questions as we go along. And like I said, this is going to be, I think, highly educational. Let me know if you don't follow along at any point. So I actually made slides up for this. I wasn't actually originally planning to, and as I started to make some notes on it, I said, you know what, it's just a lot easier if I make slides. So what we're going to do is I'm just going to show you real quick. For those of you who do not get this letter, if the ones who do receive it, if you would just oblige me for a few seconds, I'll show them the letter real quick. I want to talk about in the letter that this letter, let me show it to you real quick. And it's going to be maybe a little small. I'm working on a camera here, so I'm going to show it in front of the camera here. And the letter is this long. It's from there, and then it goes down, 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 down. It's like more than a legal page long. It's like 2 pieces of paper long, sort of. Whoops, and it goes to there. There's a second copy of it in black and white for people who want to print it. So it goes down to there. Okay. It starts off at the top with the date and hello, and just a quick little comment by me, usually some kind of sarcastic comment about news or earnings or something like that. And then there's these indicators that I keep up here every day: the intraday outlook, the midterm outlook, and the long-term outlook. And very important to understand the 3 time frames and what they mean, or it could become confusing. The intraday outlook is simply that day as a day trader, which is the primary purpose for this particular letter. Now keep in mind, there is a second letter at DTS called the long-term trader that is only for, it's a position letter for long-term swing core positions. This is not that. This is a day trader's letter that talks about the market and gives watch lists, etc. So the intraday outlook is here, but it does give longer term comments as well for people who just get this letter. So the midterm outlook is the next several days. And you have to keep in mind that even though this may be pointed bullish, it doesn't mean that day is going to be green. That's the day-to-day outlook. It means that if we pull back to like a buyable area, that generally speaking over the next several days we should move higher, and we should be looking at getting positions, whether in the market or in stocks, to move higher for the next few days. Everybody clear on that? So even though this is green, you could have a red day. It doesn't. If you want to play day by day, intraday, you're looking at the intraday outlook. And then there's the long-term outlook. Now that's the big picture. That is the monthly chart, weekly chart. That is the big question. Are we going to crash? We're talking about 2001, 2008. That's the one that's answered there. So just so you understand, this has been bullish for me for 9.5 years. This has never ever, Tony, this has never ever been off of max bullish, ever. It may be someday, it's not now. Below that, there is tradability. And this is a very important feature, I think, because you could have a bullish outlook, but it may not be very easy to trade. In other words, if you're 2-3 days up in a row in the intraday pattern, you may have another day up, but it's very difficult to say ahead of time where do you get in, where do you get out. Very difficult to trade it. And there's times where the midterm pattern may be just kind of sideways, so it's not very tradable at the moment. So there's not only the ranking about whether or not it's bullish or bearish, but it's how likely it is that you're going to be able to trade it properly. And actually, the best thing that you'd want to see in the letter would be one of these to be pinned one way or the other and have a very high tradability rating. And some days it's like that, some days it's not. Okay. And then we go through, and every once in a while I forget to change these. Sometimes on the intraday, sometimes the intraday comment doesn't match. Once in a while I forget to change it. But then there is a chart of the QQQ daily and the QQQ 60. And sometimes this will be a 15-minute if I need to show more detail. And then there's market comments. There's what happened yesterday. there's the outlook for today, and then there's yesterday accuracy. So let's talk about each one of these. First of all, 95% of the time I'm showing the QQQ. To evaluate the market, I look at the QQQ and the SPY together. Okay? When they're doing the same thing, it doesn't matter what you look at. When they're doing different things, it's never clear which one to look at. You can look at the SPY if you want, I don't care. I look at the QQQ because over time, I unquestionably know the QQQ tends to lead the way more often than not. Not every time, but more often than not. So I will always look at the QQQ. But I will always be looking at the SPY and commenting on the SPY. Those are the two things that make up the market, I think, for any sensible person. Now, you should not look at the Dow. You can trade the Dow E-minis if you want to, but the Dow is 30 stocks. It does not dictate the market. The small caps are good to look at for analysis. The IWM, the Wilshire, just went to a new all-time high. And typically, the small caps tend to lead on the way down. And the fact that they're going to new highs is a little bit of a bullish thing for the market. But I don't do my analysis on the small caps. They're just a little side indicator that says, hey, kind of showing some bullishness. Okay? Everybody clear so far on what I'm saying and understand? And Tony, I see you have a question. Okay, everybody clear what I'm saying so far? And good, you can understand me and not going too fast. And okay, so let me know if you have any questions as I go. Tony, long-term outlook based on weekly or primarily weekly and monthly charts, yeah. But I mean, the monthly chart view doesn't change very often, Tony, right? I mean, if you have a month, I mean, the monthly trend hasn't changed in 10 years. So it's based on monthly, but I mean, there'd only be rare times where the monthly chart would figure in and say, hey, look what's going on here, you know. So there's the Qs and the SPY. What happened yesterday? Now nobody's ever asked me this, but I imagine some people are saying, Paul, who cares? Why take up time saying what happened yesterday? You can see it. Well, if you ever read this, it's educational the way I phrase it, and I'm trying to help educate. If you read the way I phrase what happened the prior day, it gives you clues about what kind of stuff to look for. Market falling, hitting a low at reversal time, on support, blah, 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 blah. It's not just a matter of what it did, it's kind of also incorporating why it did it. Okay? So I think that's an educational section. Outlook for today. A little talk about what's going to happen today. There could be long-term comments in here, but of course long-term doesn't change every day. You don't change your view about where the weekly chart's going, you know, every other day of the week. So, but when it's appropriate, there are comments here, and you'll see some in a minute. And then yesterday's accuracy, and it says even right there, I'm kind of sarcastic in everything I write, even though it's subjective. I'm grading myself. But I think I'm fairly fair with it, but the reason I do this is because I need people to understand that when I made a call in here that I think is very good and very accurate, you need to understand that I think it was clear and accurate. You could disagree and you can argue with me, but the point is that there's a limited amount that I can pin down accuracy on the intraday patterns. Now, it's pretty clear on the long-term pattern, you're right or you're wrong. But intraday, I'm predicting what's going to happen on a chart that's not yet in front of me yet. And there's some days that I can actually give numbers and say we buy above XXX. And there's some days I have to give a general concept to say, okay, we're going to be bullish, but there's no reference point as to where the market will hold on the pullback. So we have to wait for the trend to change. So you have to understand there's a limited amount of clarity that I can have. And yes, it is helpful somewhat, just being honest, if you have some trading experience and or especially with me, because sometimes you have to understand a little bit what's going on. And obviously anybody who's getting an intraday letter is probably, you know, somewhat versed in these, in what's going on a little bit. The timing element based on the 20... Well, that's not a yes-no question, Tony. It's based on a lot of things. It's based on the overall extension on different time frames, as well as whether or not you just broke above an area or you're on an extended pattern from before that. It's a combination of a lot of things. So it's not just a simple yes, no, X% above the 20 type of thing. But I just want to point out here that in accuracy, I think I'm pretty fair with what it is. And you'll see I have an example here. If I blow it, I just say, hey, blew that one yesterday. You know, that surprised me. And you're going to see one today. And then as the letter goes on, I just give the econ calendar and the earnings for today. And for me, I want to know, like, if a big econ thing is being announced at 10 o'clock or 10:30. I could care less what it is. I could care less what they say. That's all complete garbage, hookah to the max, just complete garbage what is said in economic reports and all that stuff. And for earnings, personally I don't care. I check the gap list, and a lot of times the things on the earnings list will end up gapping. But if it's not gapping, I don't care. So whoops. So there's on here for what I just do. I hit that thing. There we go. So there's on here for people who, just a one-stop shop. Part of this goal, it says, like in somewhere describes the letter, it says this is your like 2-minute view of the market for the day. This is everything you need right in one spot. Then I give the watch list bullish and bearish for intraday, and then also for some swing ideas, bullish and bearish. I only change these every 10 days or so on the on that side, so you have to look at it. And then there's a little educational lesson. So all this stuff is here, just so you know what we're talking about. Okay. So what I want to do, so there's the letter. That's what it looks like. Everything in the letter, you have to understand that there is a general bias afoot, and then you need some kind of confirmation. I can never say in the letter, okay, bullish all day today, just buy. Obviously that doesn't make any sense. The pattern almost always goes up and down throughout the day. There's a time to buy, there's a time not to buy. There's a time where you have a really strong bias and you want very little confirmation. There's a time where we don't have a very strong bias, so we need a big confirmation. But typically, in other words, the letter will always say, okay, once we get over this area, then we buy. And once we get over this area on a confirmed basis. Now, I use the word confirmed basis a lot. Do you know what that means, on a confirmed basis? I have a story I'll tell you just for your entertainment. For those of you who take classes with me, it means a secondary sign of strength or weakness is what it means. But let me give you an example. A long time ago, many centuries ago in another company, we used to take turns writing the letter. And every day we'd give swing picks. And there was a swing pick in there that said to to buy a stock over the 30-minute high. That's what it was. Okay, 30-minute high. So there was a stock, a $30 stock. It opened, and for whatever reason, the thing went crazy this day. There was news on it, and it ran up. The $30 stock ran $8 in 29 minutes. I'm not making these numbers up. At exactly 10 o'clock, it pulled back like a nickel. It ran up and made a new high at 10 o'clock and 1 minute by 3 cents, and then fell the rest of the day. And some new trader who got the letter said, well, you guys really screwed this one up. I went long at the 30-minute high after the stock ran 40%. That's not a confirmed new high. Does that help it a little bit? In other words, when you run a long distance and you trade above the area in focus by a penny, this happened a couple days ago. Like we had this area up here that was resistance, and I said if we go above that on a confirmed basis, whatever, and the market ran like crazy, it hit this area and then just fell the rest of the day. See, that's not confirmed basis. What you want to see is some sort of a pullback, some kind of a selling come in and then make a new high after that. Does that make sense, everybody? Just loosely speaking, without getting into a 2-hour lecture about secondary sign of strength. Does that make sense to some extent? Does that make sense? Are you totally lost? Are you trading? Have I confused you completely? Want more explanation? That's the general concept. Okay, that's the general concept. The rest of you guys out there, hello? Okay. All right. So that's just generally what it means. And again, this is not like a tracked thing. This is just to help traders, and the people who get this letter generally love it. I hear it all the time. So you have to use some common sense when you use this, because again, I am projecting what's going to happen, and we're going to look at a bunch of calls. I'm projecting what's going to happen before the market opens. Actually, at 8 o'clock the letter goes out, so it's before we even know for sure the market's going to open that day. QQQ versus SPY, talk about it. And my natural bias and the long-term outlook rating. I want you to understand something. I have been, the letter I showed you, I told you I have been, the long-term picture I have had pinned bullishly since I'm not kidding, since the market turned in 2008. I have never ever uttered a bearish word in the big picture. But I want you to understand something. I'm a bearish person by nature. So if you're listening to me thinking, well, yeah, all you perma bulls, you come and go. No, that's not me at all. I'd love to be bearish, right? Anybody know me out there? Scale of 1 to 10, anybody that knows me, I like to be bearish. And some of you may not even realize that anymore because the big picture has been bullish so long, but I'd rather be bearish all the time. Naturally, the market, in terms of time, it goes up more than it goes down in terms of days. You know, I mean, you spend months and months going up, and you spend a couple of months pulling back. So time-wise, it's always more up than down. But we get into bearish markets, and I love that. And I'd be the first one to say, let's be bearish. So just don't think I'm one of those perma-bulls that's just always bullish for no reason. There's been no reason to be bearish yet. Okay, so we're going to review. I want to go through and show you the big picture calls that were in this letter. And then I want to show you the last couple weeks intraday calls, just so you get a feeling what's in here. And then we're going to talk about them. And again, this is an educational trip. And this is where, you know, anybody who gets the letter, and even if you can ask questions about whatever it is you want to look at, okay? So let's take a look at the big picture first. This is a weekly chart of the QQQ, and again, I put this together like this, and this took me it took me all afternoon. I didn't plan on doing this, but it was a great day. We were, you know, kind of done at 11 o'clock. I got 2 open positions that are boring as can be. So this is the weekly chart of the QQQ. Again, want to look at the SPY, that's fine. I don't care. There was a difference in the QQQ and the SPY in the weekly chart. I'll talk about it later. And I want to talk about the 3 big areas that matter here, 1, 2, and 3. Now, let me run through what this is. We had a sharp sell-off, obviously. Okay, if you listen to the news at the low of this, you would have thought that the United States was about to slide off into the Pacific Ocean and we were through as a country. I mean, if you listen to some of the news stories about the incredible, devastating blow that we had. But the truth of it is after 9.5 months going higher, we gave back 2 months worth of trading. Okay? And most of that was this accelerated run up here. So we kind of shot higher for 1 month. This is a weekly chart, so every bar is a week. We shot higher for 1 month, and we gave it back the next month, and a little more. Okay, that's not what you call a devastating blow. We're not even, haven't even skimmed the concept of a crash or anything like that. It is difficult to assess how to handle this here, but amazingly, you know, this is a support area from here. This is, you know, if you look at moving averages, which are not, you know, magic, but it is amazing how we held this. And I was very bullish through this big picture. Big picture. When we started to fall, I was bearish. 2 days before we hit bottom, I turned very bullish. We had a huge day up. We came back and retested this. I'll show you this in a minute. I stayed very bullish, big picture, and for the interim term, we went all the way to make a new high. Now, here's where the SPY did not make a new high. The SPY stalled right here. That is not unusual. On the prior run through here, the SPY out-traded the QQQ. Now, I'm sorry if you're a little newer. The SPY is the acronym for the ETF for the S&P 500. Basically, the SPY is the S&P 500, and the QQQ is the NASDAQ 100. And together I look at those to represent the whole market. So very bullish through here, and then we run up and make a new high, and then very bullish here again, because now we're establishing, even though it became a wide whippy pattern. I want you to notice something too. I want you to notice this. I mean, you're only seeing, what, a year and a half. Look at that pattern. I mean, that is just unbelievable. Tight, concise pattern. Look at how it changes in here. You have to acknowledge this. Big change. Big, wide whippy pattern. Is this the market top? Well, that of course is what everybody talks about. That's the big, you know, that's what everybody talks about. I have definitely not called it that. I could change my mind at some point. At the moment, I have not. I said this is just a wild whippy pattern. There's an awful lot of people out there that said this is it, we're done. I don't think it is. One of the reasons is, even though the wild whippy pattern can be what a top looks like, not every wild whippy pattern becomes a top. And unfortunately, this chart is not live, but if you go backwards far enough, you will find, well, let me just tell you where it is. And unfortunately, I can't easily bring up the live charts right now, but if you take the QQQ and go back, to the end, mid 2015 and 2016. You see it in there? You're not seeing it on my screen, excuse me, but if you look at your own charts, weekly chart QQQ SPY middle of 2015 to beginning of 2016, very wide whippy pattern. And yet we went screaming higher after that. See, what's important to understand is where this is happening and how it happens. One little piece of news that I'm going to impart to you that a lot of people don't realize is that I'm going to say never. We've never had a market crash because of bad news. Do you realize that? We've never had a market crash because of a bad economy. Quite the reverse. All market crashes have come from irrational exuberance, as the former chairman used a few years ago. And that's one of the things that's missing here. This market started to drop because of quote-unquote bad news. And bad news drops typically give these little interruptions like this. Now, this will be something obviously I monitor every single day. And it is possible we could have kind of a sideways pattern here for a while. But what's important is that wherever we go, is that it's not a matter of being right or wrong, it's a matter of making money. And that's why you go long here, you go long here. Whether or not you short up here is optional. I probably will short up here the next time we get here in terms of longer term positions and see what we do, because we may end up kind of a sideways grinding higher type pattern. Now something could happen that could change that view, but for right now it's not. But let's take a look. I just told you what I feel the market would do after it did it. That's not very impressive, right? Anybody can look at a chart and explain to you why they think it's going higher, but I'm a little different because I write a letter every day that would catch me if I'm wrong. So what I want to do is I want to take these three focal areas on the weekly chart. You see these three? And this is where we'll get real educational here. Here's the daily chart, the same areas. Everybody follow me? This is the beginning of February. This is the beginning of April. This is the end of April. Those are the three. See them here? February, April, April. Got it? Those three things that are higher lows on the weekly chart. Here's what they look like on the daily chart that I snapped. Okay? So I want to go through and take a look at the letter comments surrounding these three time periods in the long-term picture. Make sense, everybody? You follow what I'm doing here? This is the cleanest, simplest way I can try and have a good educational session. Does that make sense? Everybody good? Because if you don't follow now, you're going to get more lost. Good, good? All right. So I'm going to back up here to number one a couple days before, and we'll actually take a look. Again, like I said, anybody can sit here and explain to you what happened past tense, right? Okay, anybody can, right? I mean, you probably see people all the time. You go to events like this, if you go to other events, you have somebody saying, well, here's why the market did this, and here's why everybody was fooled. Well, okay, you know, a month later, anybody's a genius. But I have to live this every day, and that's what I do. So if we go back, so again, here's February. You see this red bar right here? That red bar right there I'm pointing to. That's where we're going to start the market discussion. From the letter of that day. Now this is a cut and paste quote from the letter. Okay, I'm not lying to you. There's people here that get the letter. If I'm lying, one of you people, please, you know, annihilate me here on the screen. I will say that the odds are very high. We will see a market bottom today that will last. We are gapping down a lot at the moment. It'll be worth a trade to take one very bullish, very early, as soon as the market moves higher, even in the opening minute. So this is both a long-term call and a day trading call. That takes some brass ones, I guess you'd call it, to go long the opening minute of the day in a letter that comes out an hour before the market opens, right? Well, here's what happened the next day. Ready? Flip to the next day. Here's what happened. That tail formed in the first 60 seconds of the day. The day trading call was spectacular, and we had this huge engulfing bar. Now, was that the low? No, we retested it. So a couple days later, we come down here and now before we retested, this is the very next day. Hopefully you follow along here. Very next day, and here notice that as an intraday call under 4, and that was this area that was consolidating near the low of the day. Today, on a confirmed basis, is bearish. Best played for the day only, with the target at yesterday's low. Yesterday's low. You know how far away that is? Right? What happened the next day? Boom. Complete. Huge. So these two day trading days, huge days. And then the problem now is, though, I said this would probably be the low that will last. Well, we retested it. You get retested sometimes, and it's the type of thing that if you're long term, you gotta do something like this. The next day, we put in this tail and come back. And here's the comment. I believe Friday, that was Friday, was the low in the market. I also believe we're going to see a rather quick recovery to this flash crash event. I use the term flash crash without concern as the term really doesn't have any meaning. I just mean to say that these very sharp sell-offs do not send permanent tops unless they fail on a retest. I will go as far as to say I think if you were there, Friday's bottoming tail, by the time the market closed, was a buying opportunity on a swing core time frame. I said that to the room. I think it's worth starting some positions. Well, as you know, that is, as we looked at the other charts, that did become the low. Here's the rally that ensued, all the way to a brand new high. That move went to new highs in the QQQ, but not the SPY. Now again, the SPY stalled in here. The SPY did not go to new highs. And again, that's largely the result of what we call a sector rotation. The prior move up, the SPY outpaced the Qs, even though the SPY and the QQQ are not quite as unique as they used to be years ago. You always hear that the QQQ is the home of technology, but there's a lot more interesting stuff going on, so it's not quite as clean. But when you get a big move in healthcare or the banks, it's typically more the SPY. Technology is definitely more the Qs, but there's a lot of overlap. But anyways, the sectors that made up the QQQ are the ones that got really bought. This is a new all-time high, and that's in mid-March. That's after the crisis of the low. Then we fall back down to this area in here. Now, on the way down, right in here, in all fairness, I thought we would hold in here. There was a day in here that I said, hey, I think, but what happened was we gapped down the next day. I thought by my words that we would hold, but we gapped down the next day and then just kept falling. So we fall for a few days, and then again, big picture, the next big call is here. Times like right now are once in a 5-year events, and while anyone can make their predictions, the key is to acknowledge when you sit and watch and when the moment is right to strike again. If today turns out bullish, it may be time to begin a bullish intermediate bias. And of course, then the very next day, that's the morning before we see what happens. The day closes like this with the big green bar. Comment for the next morning, midterm is back to bullish, and this is the opportunity for midterm bullish positions. Aggressively, this can also be considered to start some long-term positions very cautiously. All right. So that is, and again, then we launch and we run up and we come down to here. Now, again, here's where a lot of people got bearish because they don't understand the, not very complex, but just the need to understand multiple time frames. And people would say, "Oh, Paul, we made a lower high. We're in a daily downtrend now." But no, that's not what's going on. The mother time frame, the time frame of reference right now is what time frame actually? Anybody know what the time frame of reference is? The time frame that matters? Right, exactly, Glenn. It's the weekly chart. We're playing this chart. Boom, ba-boom. So if this is going to go to a new high, the daily chart will continue to its uptrend through this part. Notice that through here on the weekly pullback, how often does a weekly pullback involve a daily chart in a downtrend? Where's the slide we're on? Right here. The answer is 100% of the time. When the weekly chart pulls back, even in a weekly uptrend, the daily chart will look like garbage. But if the weekly chart is what's holding, you wait till they get to the right week area, and then you wait for some kind of confirming move, either a bullish day or a pattern failure on the daily chart. So here's your engulfing bar that occurs right on the weekly area that we care about. Weekly chart in gear. Every pullback again becomes viable on the daily chart. This is not a time to short. So many people this day. Market's falling apart, time to short. No. What do the letters say? This is bullish bias across all time frames. During this pullback, the daily chart has been justified as a large gap up, remain unfilled, and continue higher into the close. It will also be followed, say, by another gap up. So, again, understanding what's going on, these are buying opportunities. Even though this is admittedly a very volatile, difficult time. I showed you the weekly chart the last 2-3 months. It's a very unique time that you see every couple of years. We saw it, like I said, in 15, 16 last. And there from there, we go up. We have our jitters and jingles because the market, we are seeing a lot of volatility, but bottom line, we keep grinding up, and that's where we are today. This is a snag today sometime earlier this morning or late morning or whenever it was, around 11 o'clock. So that is to the extent that this letter comments on the long-term bias. That's what it does. that takes us through to today. Now, those comments don't appear every day because the daily and weekly charts don't change every day. On a day-to-day basis, its primary focus is intraday. So let's take a look and switch to the intraday charts that are posted in the letter. Remember, in the letter, in case you forgot it, you know, those of you who get it know this, but I'm trying to help the people that don't get this letter, that every day there are two charts posted, a daily chart or a weekly chart, and then an intraday chart, usually the 60, but it could be the 15. So let's back up the last couple of weeks, and I'm going to go back to what day is that? 3rd. So we're going to go back to like right in here somewhere, just a couple weeks ago. Okay, so we're going to go back to this area. Oh, I think it's this bottom right in here. Okay, and we'll see how it's handled on an intraday basis. So again, I have to start somewhere. So I'm starting with the letter, and it may not make sense because you're not seeing the chart to the left, but it just simply says, I think a drop to 4. Now the charts are numbered with little numbers that help you identify the areas I'm talking about. So typically 1 and 2 are the resistance and support areas on the daily chart. 3 and 4 are the resistance and support areas on the intraday chart. Also, it says, when you look on the letter, I'm not going to run through this all, but there is, if you click here, there's how to use this letter. And when you look at how to use this letter, it explains some things to you. And if you click on that, you get this written document that goes through, you know, a whole bunch of things about how to use the letter. It's technical in nature, blah blah blah, conditional comments, and also it explains in here the difference in the lines that I use. You notice that this is a red dotted line, but yet this is a green solid line. Do you see that? And sometimes there's a green wide line, like a hazy line. Well, I'll show you when we get to it. They all have different meanings a little bit. A green solid line means this is a real support area that you would play to hold. A dotted line means that it is a support area, but not one that you would want to hold for support, but one that you would play short if it breaks. In other words, it's a theoretical, it's a subjective support area, but one that you would short if it broke. Does that make sense, everybody? In other words, it's not really real. And sometimes it's very hard to distinguish the two. Like this line up here is dotted. If we were to run up here in 2 days, that would be a real red line because we would stall. But if we grind our way up here slowly enough, it will not. This dotted line here was always dotted because the letter said after this day, see right there at the end of that green bar? This became a dotted line. You may say, why? That's a real significant area in the daily chart. It's not. If you understand charts, the letter said this day there is nothing left here. There is no resistance left here. 0. Again, this is where people don't always understand charts properly because people think, oh, we're going to stall there. No, we're not going to stall. We're not going to reverse there. So when we got here, I just boldly said there's no resistance there. We're going higher. And we did. That's why it's a dotted line. Now, when you have a solid line, it means that that's an area you should trust to hold. And sometimes I use a wide, lighter color area because it's a wide area of support and there is no exact area that we can pinpoint. Okay? Does all that make sense? I feel like I'm talking kind of faster. Does that make sense, everybody? Is this educational, exciting, boring? Shut up, Paul. Keep going. Talk slower. Explain more. Anything at all? I don't know what you mean. You say there's nothing left. Exciting? the rest of you 40 people, is it I mean, seriously, I want to know if you're kind of following along. Are you getting something out of it? Is it completely over your head, completely boring? Everybody's fine? Okay, all right. Well, that gets into just more of a deep technical understanding, Gordon, but it's because of what was here. See, all the resistance, it was transferred to this area right here. And this is the area, when you blow through this, there's nothing left. There's nothing left, really. It just, you know, it's one of the things that I teach. We go through, in the classes I talk about the 4 things you'd use to evaluate support and resistance. And when you understand the whole analysis, you start to understand that some areas in the chart are meaningless. Just meaningless. Yes, there's something to the left. And yes, when you look, there's something there. I see that, but it's nothing. It's just a paper cup. There's nothing there to hold anything. It's true today. We had, who's in the room today, right? Somebody asked a question, and we had a long discussion, right? Somebody said, well, there's support on the market today, and I said, no, there's no support today, right? Remember that, everybody? I said there's no support today, right? That we will just keep bleeding and bleeding because there's no support. Now, we're kind of holding still the area, but I mean, you can't be bullish today until we overcome this area. Now, the most bullish thing can happen today is we just close out kind of sideways here and gap up tomorrow over this area. Big picture is kind of bullish, but intraday it's bearish. You have this conflict that today intraday was bearish, big picture bullish. So, right, Gordon? Yeah, right. There's just nobody left there. I mean, when I try and teach this stuff, I always talk about teaching the language of charts and not cookie cutter patterns. Because if you're going to memorize cookie cutter patterns, you have to memorize 4.2 million of them. I counted. It's exactly 4,273,385 patterns that you would have to memorize if you want to memorize cookie cutter patterns. Of course, I'm joking about that number. But you get the idea that it is not about memorizing certain patterns. It's about understanding the language of charts and understand, because every chart is different. It's like a fingerprint. You know, every chart's a little different. You have to understand what's going on. And sure, there's basic stuff that can permeate through charts. You hit a major resistance area, you're in an uptrend, there's stuff that happens, and that's great when it does. But you know, 80% of the time we're dealing with the in-between areas where you're like, well, I don't get what's going on. What's going on? Right? Alright, so continuing on. And please feel free, questions, comments. I can see I'm going a little fast here, so I'm probably going to be done early at the rate I'm going. So here's the first day we're looking at the intraday comments. It says, I think a drop to 4, and again, that is a line that was on the chart that you're not seeing here because this is like the next day. As we go on, we'll start to see that. In other words, I captured a chart, we're moving from left to right, and we have to start somewhere, so we're starting with something where you don't see a whole lot of, but the drop to 4, and 4 is right where the arrow is pointing. With a 5 or a 15-minute buy setup is definitely worth the play long with conservative targets depending on how long it takes to get to the top of the range of 3, which is up in here. If the market is very bullish early on, I would not try to play the breakout above 3, but rather the first 5-minute buy setup that stays above 163.60 down here. So then here's what happened the next day based on those comments. Same chart, just add 1 day to the pattern, boom, there it is. So here's the buy setup I said to buy on 4, right? Kind of a home run day. So I forgot exactly what the letter said, but in the self-analysis it gave it a 10 and said nice call, perfect call. And if you played this long on this buy setup, boom, you capture all that right to the first resistance area. So that's how the day closed. So then we're at the end of this day, and the question is, what do you do the next day? Well, from the letter that day. However, if we rally to 3, and that's up here, if we rally to 3, if we rally to this area, the 5 or 15-minute sell setup in the area would be a valid play short. So what do you think happened the next day? What do you think happened the next day? I showed you where we were on the daily chart, remember? On the daily chart, we're coming off of that low. What do you think happened the next day? Prediction was that a 5 or a 15-minute sell set up here will make a nice short. We're going to have a big rip bar coming out of this area. Anybody want to guess? You're probably looking at a chart. You got it, Andrew. This day, I blew it. We ran up to that area, and we just blew right through it. Now, why would that have happened? Well, it's not a surprise. It's not a surprise because that's on the 4th, the daily chart. I'm on slide 18. Let me just bring you back to where the daily chart was real quick so you get an idea why this is not shocking that this happened. We're right here. No, where are we? We're right in here. So we're in the support area, and we end up having this bullish day. Is that actually this day? I have to go to a real chart so I can click on it. I'm not sure what's going on there. Die WFC. Die VIPS. Sorry, I went to my charts and I was May 4th is May 4th is this big green day. So what happened is we launched from a higher low. We held sideways after that gap up. We held that support area, boom, and it just was a very bullish day. That happens. So the letter got a bad rating. The self-rating that day was very poor. It was a 0. It was, you blew that one. What happened the next day? Oops, we blew right through the area. Okay, it happens sometimes. This is just what happened. And again, it's always a little tougher, remember, when the daily chart is in conflict with the intraday pattern. When you really want to push the pedal to the metal is when the intraday chart lines up with the daily chart and is in the sweet spot, in the sweet zone, right? So the daily chart got in gear, it held a higher low, pushed prices higher, and they pushed right through the intraday resistance area. So that day, what was said this day then, from the letter that day? The best play, and from here on it's all good calls, you will see, the best play will be the 15-minute bicep that forms sometime after 10:30 in the morning. That was like, you know, there's a whole paragraph of writing, right? But I just pulled out the pertinent call for the day. You know, there's a whole paragraph of writing, but that was the pertinent call for the day. So the 15-minute bicep that forms after 10:30 in the morning, and notice the timing, you know, to play it later in the day. And here it was. It came at 12:30, and it was a good call. It took you to the high of the day. It didn't blast to new highs. That was the high. There was no more up action after that. That was the end of it. But nevertheless, first of all, knowing to wait to that is important. A lot of times, a big part of playing intraday is knowing that when to not act, what not to do, and when not to go crazy and when to wait. And that was the call here, to wait for this. And now, as it turns out, you could have also made money just taking the open long. But it's very hard to project that ahead of time. Sometimes in the moment, you can see what's happening and you can find that. But to do that ahead of time sometimes is a little tougher. So the key play was to wait for that buy setup that happened there. So that's how we closed that day. What's the comment for the next day? Comment for the next day. And I'm sorry, that was a 15-minute chart, just so you see the difference, because that's what the play was called on. If we go back to the hourly chart, it looked like this. And here's a long comment. We are going to have a week. That should be, here, I can fix that. We're going to have a week open this morning. It appears we will have a small gap down, which, if anything, will increase the time before prices start moving up. If prices try to move higher the first 15 minutes and fail, playing short until prices reach a solid bottom is one possible concept today. That would also cover the day if for some reason the market failed and we return to a sloppy pattern, since we have not completely broken out of the sideways consolidation, at least on the daily chart. Other than that, the concept is to wait until the solid 15-minute buy setup forms in the general area at 4, which is down in this support area right here, and play long for the rest of the day. Well, again, these comments are a little softer because I can't give you numbers, right, about where the market will be at 1 o'clock in the afternoon. But it's the concept, and it's exactly what happened. You know, don't go long here out of the open. You know, short until we find a solid bottom if you want to. And again, it just kind of went sideways. And then this is the buy setup that you want to use to try and go long. So it didn't really go anywhere, but, you know, sitting there waiting for that just kept you clean that day because the market just basically went sideways. Then for that day, this morning I will trust the support area at 4, and that's right through there. This has been moved up to the day and a half consolidation, and it includes both the minor support area and major support area. If we gap up this morning close to the 167 area, the top of that green area needs to hold. If we hold neutral, then the bottom is also acceptable. At the moment, it looks like we are gapping up, so here it is. So the 5-minute buy setup that forms above 165.75 is playable long this morning. There's the bottom line. And here's exactly what happened. We opened that day. This is a little bottoming tail. Here's your 5-minute chart. Boom, 5-minute buy setup. This is 165.80. No, it's 169 right there. So 165.75 was right exactly in that area. Again, you have to use some common sense. This technically was a buy setup that formed also. That was above the area. Looking at the chart, I mean, it's not the one you would play. You'd have to know that. But if you did play it, you'd play it again here. And this turned out to be a mega home run. This is just a huge move up that day off of this support area. And this is really the support area you wanted to hit. It hit at 10:30 reversal time. It actually hit at 11 o'clock. So, again, a lot of commentary home run day that day. Boom. Boom. And that's as far as I went. The next 3 of the next 4 days was no rating on the comment because nothing I said happened, applied. I mean, it just didn't apply. The market did whatever. You know, I said go short or go long, does this or that, and it just didn't apply. And then the last couple of days were pretty good. But I just stopped there at some point because it was time to get online with you guys, and also I think that's enough to be have covered the concept of what it's about. So let me ask you guys questions, comments. What do you want to ask me about? Anything you want here, education. We talk about market going forward, any of the days I just talked about. Look back at the chart. Any comments or questions about what we did, what we said, what was talked about. Anything at all you want to go over educationally, feel free. I feel like I can't teach you too much because generally the more you learn, the more you want to learn. And some of you know this stuff pretty well already. Some of you, it might be a bit of a mystery, but learning charts is like learning a language. It's very doable, but you have to learn to speak the language. What would you like to see in the bigger picture to go bearish? That's a great question, Carlo. I talked in there's a video I put on my website called a bookmark on the market, and the reason I put it out there is because I am just upfront, the real deal. I don't pull any punches on stuff, and I'm right, I'm wrong, I'm wrong. And what I get sick of is seeing people, like for example, call a market top for 2 years. You know, every month, here's the market top, here's the market top, here's the market top. And, you know, and sometime in the next 5 years they'll be right, and then the one time they're right, they'll take videos of it and put it out there and say, look at how smart I am. Well, if you follow that person, you'd find out that they were wrong 74 times before they're right. So I wanted to go out and put a video out there and say, hey, here's where I am. I'm bullish. I'm still bullish. And I put that, it was a couple of months ago I put it out. You can go view it. And I think I said in the video, or if not, I've said in other things that I've written, that there's 3 ways you make a big picture top, Carlo. There's 3 ways to make a big picture top. And one way, let me go back to just have a weekly chart in front of me so while I talk to you. One way is the way we did it in 2008 and the way we did it in 2001 is to get to what we call a climactic top. And that also has to be timed out, in my view, with the news that surrounds things. See, the way things work is there's a couple of sayings that are pretty true in the market, and one is that the market climbs a wall of worry. And every time you hear this bad news, you know, whatever it is, you know, there's a knee-jerk reaction, the market drops, and oh no, interest rates are going up. Oh no, tariff deals. Oh no this, oh no that. But you know what happens every time bad news comes out, Carla? The market takes its little hit for the day, absorbs it, and it keeps going higher. And that is the biggest, most bullish thing you can do. When bad news is good news is great news, that's an actual great technical indicator to be looking at, right? When good news is great news and bad news is good news, that's a great technical indicator, and that is what we have been seeing and continue to see. The way market tops form is when the market continues to go up with all the negativity and bad news surrounding it, and then you know what happens, Carl? Good news starts to come out, right? The news that the market had been anticipating for years finally comes into being. And Joe, average person who works 9 to 5 at, you know, at slushy.com, they jump in the market. Everybody jumps in the market because now the good news is out, and that's their key to get in. And that last rally is what sets the market top. That's what happened and has happened all the time, going back to 1929, 2001, 2008. That is exactly what happens. So that did not happen this time at all. It did not happen. What I was hoping, Carlo, would have been right here. We started to accelerate pretty nasty. And what I would have liked to have seen would have been really good news to come out. You know, like for the media to admit the economy is improving and this and that, and have the market surge above that. We're just about at the point where I was going to say, you know what, I'm willing to call this a top. If we would have put in like 2 more bars like this or something and it would have happened on good news, that's where you form tops, is on good news after a big run. Does that make sense, everybody? It's simply what has happened every time in history. I hate to go against what you read, and I hate to, but I'm just noting history. It is what happens all the time. So that didn't happen this time, and that's been a big thing in my reason why I don't think we're there. Now, that didn't happen. Now, the second way you make it tough, Carlo, is to get extended enough, not climactic, but get extended enough that a lot of people are long, and then have a shocking event happen. To have something, remember, the market is the greatest discount mechanism in the world. It is already foreseeing all of the negativity and positivity that's going to be going forward for, you know, whatever period of time, in whatever extent. It already knows there's going to be school shootings, terrorist attacks. It already knows that Trump is going to do that, and Trump's going to do this. It's all built into the price. It's all built in. Okay? But if a shocking event comes that is outside the parameters the market knows, now, what is outside what the market knows? Well, I don't know for sure. I know if a mushroom cloud showed up over Washington, D.C. tomorrow morning, the market has not built that into the price. But if you had some kind of shocking event that really hit the market and it didn't recover from it right away, that can make a top also. We don't really have examples of those in the big picture, but in the smaller picture you do, and they can do it. But that also didn't really happen. And that becomes difficult. What they do is, what can I draw on? I can draw right here, right? I can just draw, there's enough area here. What happens is you get this big sloppy pattern like we got going on, right? And it starts rolling over. It starts doing this, right? But the problem is people who don't understand what's going on, they short this here, right? Oh, it's a breakdown. The market broke support, and what happens every time in this pattern? It goes back to here, and they stop out. They're long gone, right? And then maybe we go up to here and say, oh wow, it's time to go. That's stupid playing. Everybody understand what I'm saying? There's times you do buy breakouts, but this is not the pattern. This is what we call a stage 3. Well, we don't know if it's a stage 3. It's a stage 3 or a pause wide and whippy pattern. And you don't make money playing the quote-unquote breakout. You make money playing this breakout. That's a breakout that you play. So if you want to start shorting, what we want to see is we want to see the market not able to make a new high, next pullback, and then you start shorting up in here. And there's a very specific way you do it. You short certain stocks that have patterns that are, well, let me hold off on that a minute so I don't lose the train of thought. Remind me to come back and talk about what stocks are short, because I talk about this on the Monday night sessions. Are you guys all there? If you guys are there on the Monday night sessions, you've already heard this discussion. But so what it involves though is it involves seeing this pattern do that, and it becomes very difficult, Carlo, because you're never quite sure, is this just kind of a wide whippy uptrend that's going to continue, or are we actually going to roll over? And deciding the point at which you pull the trigger and say, okay, that's now a lower high or an equal high, I'll start shorting, that becomes a very tough job. And that's why this is the least most favorable way to start shorting. Believe me, like I said, I'm love to be bearish, and I'll be the first one with the foot in the door if we are. Now, I started a long-term letter, and the thing to do is, you know what, you go long here, which I did in the letter. You go long, period. You go long. That's what you do. I don't care what you think of the market. You go long there. Now the question becomes, what do you do up here? And up here, I think this is a stock picker's market, and you want to go long stocks that have a chance of moving up here, and you want to short stocks that have a certain pattern when you get here. And you may end up with long and shorts long term. It depends how we act up here. I got to see what happens. But there's a very good chance that even if we're bullish, we're probably going to react bearishly up in this area, pull back, especially since the SPY is not going to be in the same area. When the Qs reach their prior high, the SPY is going to reach its area right in here where it stalled. So it's something you got to kind of take bar by bar when you get up there and just see how it's reacted. Remember, one of the things I always talk about, it's not what happens, it's the reaction to what happens. Okay? Yeah, well, that's what I was going to talk about, David. Let's say we get up to here. Let's say we get up to here, which I suspect we will. And again, we might make a new high. It doesn't matter. Remember, making a new high is irrelevant on this pattern. New high, slightly lower high, doesn't matter. When we get up there and we look around, we say, you know what? I think we're running out of gas. Yeah, excuse me 1 second. I've got an open position on something. Excuse me. If you're in the room, I'm going to post this here. VIPs stop down to 12.13. I'm going to let that go. I think it's going to keep dropping. VIPs All stop to 12.13. And WSC, just let it go, man. All right. So here's the question. When you get to this prior high and you start saying, okay, I want to start shorting. Well, you can short the market. You can. It's if you get the perfect setup, that's great, but it's tough some days because you don't always know exactly where the top is. You may make one more little pop one day, you may gap up one day, you get taken out of your position, and then you drop and you don't have anything. So I like to usually have a buffer and to try and short stocks that have a certain pattern. If you're going to short up here, what kind of stocks do you want to short? Give me some thoughts. What kind of stocks do you want to short? And by that I mean, do you want to short stocks that are climactically moving up, you know, screaming to new highs? Do you want to short stocks that are extremely weak? If the market's running up and you have a market stock that's been falling for 4 weeks, is that what you want to short? What do you want to do? Yeah, here's where there's something really tricky. And again, this is where, if you read Technical Analysis 101, you'll learn just enough information to get your head handed to you almost every day in the market. Can anybody relate to that? Technical Analysis 101, you learn enough to get your head handed to you on a daily basis. Anybody agree with that? if you just, you know, get the cursory view of technical analysis, you know, you'll get killed. It's not that anything is wrong, it's just that you don't understand enough. Believe it or not, shorting the relatively weak is the wrong thing to do in that situation. Anybody know why? Shorting the relatively weak, in other words, when we come up here in the market and you find a stock that's doing this, getting killed, and you say, well, the market's been rallying, this stock's falling. When the market falls, the stock's going to get killed. You know what's wrong with that? But first of all, I can just tell you it just doesn't work. I can just tell you it doesn't work without telling you why, but I can tell you why too. Joe, you've been at the Monday night sessions. That's not fair. Joe's cheating. Give him no credit at all for that. The problem is, guys, when the market is up here, people are not really bearish yet, right? I mean, we're making a new high. We're at a new high. And what's funny is when what will happen is the stocks that drove the market up to here are extended. And even big money will come out of the stocks that are extended that drove the market this high. We agree with that? When the market comes out, when money comes out of the market, it'll come out of the stocks that had huge moves, the ones that drove the market higher, right? Remember, some of these stocks are moving higher, some are moving lower, but the balances are moving up. So when the money comes out of those stocks, but yet people are not yet bearish, where's the money going to go? Guess where it goes? It goes to the ones that are looked upon as being a great value, the ones that got killed for no reason. And anybody ever experienced this? You go to short a weak stock, and the market starts to drop, and the stock rallies. You ever seen that happen? Anybody live to tell that? It's the common thing. It's the typical thing that happens. Right. So the idea of going for the weak in this situation is the wrong idea. What you want to do is you want to go for the ones that were strong, but oops, they're failing, and we call them like retest. And every Monday night I identify a few of them. But you want to have a stock that's also been in a nice uptrend. Let me draw the market and the stock above and below each other. Like, here's what you want to look for. You want to look for a stock. So when the market does this, right? The market does this. You want a stock that did this, like this, kind of like that. In other words, it's tried to make its new high and it's failed already twice. So it's strong. It's still up there. It has a lot of room to drop, but it's already proven it can't make new highs, not even close. And especially if you get like what I call a thick mattress area in here, that's what you want to find. So you want to find something that's pushing higher, but it just is pushing into this very difficult ceiling. And as the market tops out and makes its high, this thing didn't come close to the new high, but yet had a lower high type of rally. Does that make sense? Just theoretically. And if you come Monday night, you know, I usually give examples of what those are. And that's exactly, for the first time in 9.5 years, that's what I'll be looking for in the next couple of weeks, probably. Next week or two, depending on what it is. And this will be a tricky time. I mean, this will be a tricky time. But you got to, you know, play it smart and play the odds. And, you know, if you're going to short, you short as we try or fail to make that new high, not on the next breakdown. Now, again, everything I'm saying, can change on a daily basis. I mean, I could draw you a weekly chart that I could be bearish on a breakdown, but I mean, it would take a couple weeks to happen. Having invested $10,000 40 years ago, May through May, June, July, August, May through October are the most bearish 6 months of the year statistically. November through April are the most bullish. You know the difference between having invested $10,000 40 years ago? If you would have invested $10,000 42, 44 years ago, it was originally a stock almanac thing, and then somebody redid the study, but stock almanac, most bullish, most bearish months of the year, or something like that. Yeah, it's a sell and may go away thing. And again, you don't trade by that. You don't sell your portfolio in May, but I mean, it is a statistic that is relevant that you look at. And again, if we would have run up into May, if we would have kept going on this pattern to May, wow, I would have I would just be drooling. I wouldn't even gone to sleep at night probably. But it's not what happened, unfortunately. Unfortunately, we get to February, and then now it's kind of a little bit more of a who knows thing. And I don't know if selling may go away applies right now. I mean, it doesn't apply all the time. I mean, look at last year, right? You got killed with that, right? Look at selling may go away. May to October was huge, hugely up. So it's not something you trade by. You don't live by it. But it is a statistic you want to keep in the back of your mind. Those statistics are technical in nature. It is part of technical analysis, right? Well, Joe, that's what I just talked about. But, when you take classes with me, we talk about that a lot. And before you make a determination whether it's stage 3 or a pause, there's two things I talk about that are much more important to look at before you make that determination. Because you know what? If you go back, see, I have this problem here. On my other computer, I'm logged into the trading room, and that's where my charts are, and I can't really pull up charts. But, Joe, if you go back, everybody, if you have charts in front of you, I can't show them on the screen because I have plays open with the room and I don't want to exit the room, but and I should be able to open both rooms on that computer, but I have had trouble doing that. But if you go back, take the QQQ and go back on your weekly chart, because I had the same argument, back then. You go back to start scrolling through 2014, and then tell me what it looks like when you get to 2015, 2016. I mean, boy, that looks like a stage 3, right? But yet, we resolved it to the upside, and not only to the upside by a little bit, but huge. And you could say, well, yeah, we dropped a lot in the, yeah, but you know what? We dropped, like, in mid-2015, we dropped from a pure uptrend and we just fell. There was no warning, there was nothing. It was just like one of these little crash things. And then after that, there was never a downtrend. So if you go back and look at a weekly chart in 2015, 2016, you would say, Paul, well, that's stage 3 all over the place. But yet, it wasn't. Because again, there's two things I talk about that are more important than the actual analysis that you may have learned about helping determine when something is reversing and pausing on a base basis. A base basis, there's a couple things that are more important than the 3-point analysis, but I don't want to go into that right now, but you got to keep that in mind as well. So yes, I mean, anybody can pull this chart up and say, gee, it's pretty whippy, looks like a reversal type base. Okay, you put that in the bearish ledger, and then you keep doing your analysis. I'm not sure that it's going to be. And again, what's more important is not the big prediction. It's making money from your call, right? Isn't that true? There's a saying that I live by more than anything else. My style of trading I call moment in time trading, and it revolves around the fact that what's important is making money, not being right or wrong. And you may think that's a stupid comment. Well, it's not a stupid comment. As a matter of fact, there's a who else has that as their motto? It was what's his name? Mark Douglas. I think that's one of his sayings too. It's very true. And it's the same thing. You can be right in being a stage 3 and lose money. So it's how we play it. And I think when we get to the top here, it deserves a serious look to consider short positions on the appropriate stocks when we get there. And maybe you make money even if you're wrong about being a stage 3, right? Or you get out unscathed, untouched, unfettered, undamaged, which is always a goal as well. Holy cow, it's 20 to 4. So, great question from a couple of you. Are there more questions? Those of you in the room, we're getting to the close of the day here, so VIPs, I'll stop. I'm going to set mine, I'm going to set it to 1206. We're just going to follow that into close and still the whole position. And WFC to 86, right to that pivot there. We've been running without targets on these. And we're just going to trail them into the close, okay? I just typed that in the room if you're in the trading room. It's still open, by the way. I didn't close it down. Because this is the seminar room now. 2 rooms. Thanks, Carlo. By the way, I'm doing I'm going to do a talk next week. All of you know there's a calendar out there right on the homepage. Where am I? Hang on, don't go anywhere yet. Carlo, don't go anywhere. You guys are all members, so I'm sure you know. Here's the homepage. Do me a favor, if you've never read it, scroll down on my homepage and read the warning. Would you do that for me sometime? I think it's something everybody should read. And then on the calendar page, next week, is it next week? I'm doing a talk for all you members on the 23rd. It's going to be another very educational talk. It's going to be the week's 3 best trades and 1 worst trade on intraday trades, day trades. 3 best, 1 worst trade. It's going to be next Wednesday at 5 o'clock. And the following Wednesday, I decided to have a question and answer event about the seminar program that I run. Not educational. Just I will, brag about what I do, and you guys can ask questions. And I'm probably going to title it "Why Seminars Are a Waste of Time." It's like a good title for a presentation. Why trading seminars are a waste of time. I haven't decided yet, but it'll be titled something like that probably. And that's it, right? More questions. We got 15 more minutes. We can end earlier if you have a. Big money decides when is the crash in stage 4. Yeah, Tony. I've never run the big money, so I can't swear to you the exact procedure that happens, but there's a human event that happens too. There's that snowball effect that happens. They're all standing around looking at each other, and it's kind of who blinks first, and somebody blinks and everybody starts selling type of thing that can happen, yeah. And we try and, we try and see that the most difficult thing to deal with are these like flash crash days where you have this big huge day out of nowhere, because you can't predict that. It just happens. But the good news is that those rarely lead to market tops unless the market was ready in a position to be at a top. Any other questions? Thanks everybody. Have a great weekend.